Welcome to the Gold Market Review for February 18, 2026. This is an educational report on the current state of gold trading. Our review today covers key market factors, technical indicators, and structural demand influencing gold prices. Here is your detailed analysis for February 18, 2026. As of February 17, 2026, gold prices are trading near $4,962 per ounce, stabilizing within the upper $4,900 range. We begin with a look at the gold's price position and the macroeconomic forces at play. After recent volatility around the $5,000 psychological threshold, bullion has found support as investors reassess dollar strength, Treasury yields, and evolving geopolitical developments. The US dollar remains relatively firm, limiting aggressive upside momentum. Concurrently, the 10-year Treasury yield hovers in the low 4% range, reflecting balanced inflation expectations. Next, we turn our attention to the policy environment and the technical outlook for gold. Markets are positioning ahead of upcoming Federal Reserve communications and inflation data. Strong economic releases could reinforce higher for longer rate expectations, increasing the opportunity cost for gold. Technical momentum currently signals consolidation. Oscillators like RSI and MACD remain close to neutral territory, suggesting the market is absorbing recent swings instead of establishing a decisive directional breakout. This compression often precedes a larger move. Beyond short-term factors, long-term structural and geopolitical demand continues to support gold. Physical demand remains supportive, with Asian import demand and central bank reserve diversification providing a structural backing for gold prices. Central banks continue gradual allocation into gold as a hedge against currency volatility. These structural flows ensure pullbacks are met with renewed interest. Finally, let's review the critical technical reference levels to watch in the coming sessions. Technically, support is emerging between $4,920 and $4,940, defining the lower boundary of the current consolidation range. Resistance remains clustered near $4,990 to $5,020. A sustained move above $5,000 is necessary to open the door to renewed upside momentum. To summarize our findings for today's gold market review, the market is trading firmly within the upper $4,900 range, balancing macro forces and structural demand drivers. The $5,000 threshold remains the key psychological battleground. Thank you for watching this educational gold market review. Remember, this is for educational reporting only and is not financial advice. Subscribe for daily market reports.